We're joined here once again with Eat Well President Mark Anid to discuss the acquisition of Sol Cuisine that recently set a new bar for valuations of plant-based companies. Mark, welcome back.
Brandon, good to see you and great to be with you and your audience again.
Yeah, and excited to have you because, I'd like to start by discussing exactly what I just said there, the all-cash acquisition of Sol Cuisine that saw it receive a 6 times multiple on its revenues as a single plant-based CPG brand. If you take that same multiple, Eat Well would be valued at 4 times its current price. How does this acquisition set a benchmark for other companies within this space?
You're spot on. It's all about the benchmarks and the momentum in the market. The Sol acquisition reflects what we've been saying at Eat Well for quite a while, a few decades if you remember the experience of our collective leadership team. There are secular trends that are changing how people eat, when people eat, and the choices they make. Eat Well brings the next level of differentiation because we're vertically integrated. So with our Bell Pulse business alone, that's going to do $60 million in revenue this year, and our target of $100 million for the total portfolio next year, you can start to see the math. We are a great buy right now. We're a great value because our story is brand new. The markets are just starting to hear about Eat Well Group, vertical integration with real revenue, real economics, and also very exciting CPG brands. We just launched our Sapientia Snacks into Federated now. So you can get especially our delicious ketchup flavored plant-based Cheeto in Federated stores, 350 of them in Western Canada now, in our Amara baby food business, which is exiting with a significant growth curve this year through e-commerce, Costco, and more.
Yeah, we're going to get to Amara in just a moment because you said something else as well. You said a potentially great buy. And speaking of that, you currently have a 55-cent private placement open for up to $5 million in proceeds. Can you dive into the reasoning for this raise and where these funds are to be allocated once that raise is closed?
Sure. Strategics are very excited to get into this business and to get into our platform as we build it out. So for accredited investors, we're doing a $5 million strategic raise that's going into the M&A service and working capital. It's all growth money to realize the gains in e-commerce, to continue to bolster our consumer and CPG businesses and roll out more new products. That's, by the way, just the precursor. We've announced that we've engaged Roth Capital out of California, who's going to lead us onto a NASDAQ or New York Stock Exchange platform within the coming months. Lots of excitement is coming for Eat Well Group now.
Yeah, and it's nice to hear that as well because, we speak about, I've spoken this with yourself and just with other people within this space, a lot of the companies right now on these smaller exchanges, they're doing good things. They're executing. They're getting real revenues, and for whatever reason, we can start to name a few. We'd never know if it's true or not. But at the end of the day, those valuations aren't quite there. That's why a lot of these companies like yourself are making that move to the NASDAQ, to the New York Stock Exchange, where there's just such a larger pool of capital, but also they can evaluate companies correctly. So excited about that. And speaking of valuations of companies, and you spoke about Amara Foods just recently ago, you've now officially closed your majority stake acquisition of that company and have since announced it was the #1 new release on Amazon after a 533% increase in revenue since January 2021. How do you see this part of your business continue to grow in the new year?
Amara is going to be one of our fastest and best growth drivers as we head into 2022. Remember, in our thesis, we're very selective about where we go with brands. So we like the baby and infant nutrition space because it's $90 billion worldwide. It's still growing at a high single-digit CAGR, but it's not been overexposed with plant-based nutrition today. It's still legacy dairy and processed foods businesses. Amara is one of the fastest growing, most delicious, 100% organic and 100% vegan infant and baby toddler nutrition programs out there, or platforms out there. We're rolling out in Costco's, and with a target to do it nationally in the US by the end of Q3. We're starting to roll out through California, over 160 clubs in the first half of the year. We're having very strong e-commerce performance, and the consumers love this product for their kids. The beautiful thing for investors is young households are very regiment driven. I have 4 young kids. When you find things your kids love to eat that are good for them, that stays in your basket for years. And the more families grow, the more Amara grows. It's a very exciting time. We couldn't be more proud of Jessica Strusenegger, our CEO, and the leadership team at that company.
Yeah, that's fantastic to hear, and you're very, very right on that. I've got a brother and a sister who both have 2 kids who are very picky eaters, but when they do find that healthy item that they really love, that's the item they get every single time. Doesn't matter if it's a sale or not, they're getting that item. So right. Very good point there as well. Now, I did want to focus on something really quickly because I know in Saskatchewan, there's been a lot of weather concerns in terms of droughts and flooding. Has this had any negative impact on Bell Pulses for supply of your raw crops either this year or leading into next?
What I want to tell you about our Bell leadership team is they've been in the business for several decades. So this is not the first time they've seen challenges in weather conditions or crop patterns. So the short answer is no, we've not had any volume hits or demand hits. We're still on track to deliver approximately $60 million in revenue, as we've said earlier this year. Now, certainly there have been some slowdowns in things like the transportation effects with some of the mudslides, or as well some of the buying. But because we have relationships with over 3,000 farmers that we've been in business with for years, we know how to protect, anticipate, and secure the supply at the right price points. Certainly it's been expensive to retain that quality of product, but those are investments we will make in the business because we have some of the biggest customers in the business. Ingredion, General Mills, Nestle, Colgate have come to expect a certain reputational quality from us, so we will not skimp on that. The business is still heading into 2022 with great double-digit momentum. All of those businesses I just mentioned, those customers, are growing in people and pet food. We're growing worldwide in 36 countries, and we're also finding new product offerings, which we'll have to share more about next year, not quite ready, which will continue to create price premiums. We'll continue to create good ESG and plant-based solutions for customers and consumers alike. And this leadership team is absolutely on point to weather the drought and have a very strong double-digit growth here in 2022.
Yeah, very well said. I appreciate that detailed answer there on that as well. Another thing, and lastly, of course, as we round off 2021 and head into the new year, which you were speaking about just now, what should investors be expecting from Eat Well Group in the new year as you aim to hit your guidance of between 90 to 110 million in revenue next year?
It's all about momentum right now and momentum with execution. As we've said to many of our friends in the industry, we're delighted by the secular change in consumer behavior, in customer behavior, and retailers. Even recently in the States, the newly appointed mayor of New York City is a vegan who wants the schools to provide significantly more vegan options. So momentum is here and it's here to stay. We have significant executional plans in place, as we've mentioned. We're growing our omni-channel footprint in the States. In Canada, Loblaws, Costco Canada are knocking at the door and they want Amara products now. Our e-commerce business and consumer products is growing quickly, and that's an over 50% gross margin. And our snacking products are continuing to launch and expand as we head into half one. This is a disciplined breadth model with just the right number of products in the North American continent, and we have the U.S. on-ramp. So come this time next year, I think we'll be celebrating a very strong 2022 for Eat Well Group, and we have every expectation to become a household name in North America in that year.
Yeah, once again, very, very exciting to hear that. Personal investor myself as well, because I really do like this story, so I love hearing that for myself as well. But thank you once again, Mark, for your time, and look forward to having you on again, because every single time we do, we're either talking about something that just occurred or hinting on something that's about to occur. So I'm always excited by these. But thank you for your time, and look forward to speaking to you again soon.
Terrific. Thanks, Brandon. Always a pleasure.